Welcome back, everyone, to Stock Talk.
Great to be here.
If you're enjoying these discussions, please do take a second to subscribe. Maybe share it with someone you think might find it useful.
Yeah, and comments, likes, they really do help us keep these going.
Absolutely. Okay, let's get into it. Today, we're doing a deep dive, a really focused look at Michael Burry's Q1 2025 portfolio filing.
Just came out, hot off the presses.
Exactly. And our mission, really, is to unpack the big changes in his strategy, figure out what they might be signaling for the market. We want to give you a solid understanding, without getting totally bogged down in every single detail.
And right off the bat, the changes are pretty dramatic, wouldn't you say?
Oh,
I
definitely.
mean, the whole shape of the portfolio has shifted. We saw it jump from, about 77 million across 13 holdings to now nearly $200 million, $199.2 million to be precise, but in just 7 positions.
Much more concentrated?
Very concentrated. And the really crucial part, 6 out of those 7 are PUT options.
Wow. 6 out of 7.
Yeah. So that signals a very strong lean towards a bearish view, and the increase in value suggests, much higher conviction behind it.
Absolutely. And the one everyone's talking about, the real headline grabber, has to be that massive new bet against NVIDIA.
It's huge.
We're looking at a PET position that's, almost half the portfolio.
Yeah, 48.96%. So just under half. It works out to about $97.5 million based on the filing.
It's a staggering amount. And it's aimed squarely at the idea that NVIDIA's stock price is going down.
Right. It's a direct bet against, the whole AI boom narrative, essentially, and those really high-tech valuations we've been seeing.
And for anyone maybe less familiar, a PUT option, fundamentally, it's a bet the stock price will fall, right?
Yeah.
It gives him the right to sell shares at a set price later on.
Exactly. The right, not the obligation. And, looking at Burry's history, this kind of fits a pattern. He's known for these big contrarian moves against things he sees as overvalued. We're just looking at this filing, of course, but betting big against NVIDIA certainly feels like classic Burry going against the market tide.
The sheer size definitely suggests he feels strongly about it.
It does, but NVIDIA's had such strong performance, great fundamentals. It makes you wonder, what catalysts might he be seeing on the horizon that could actually turn that ship around?
That is the big question, isn't it? And it's not just U.S. tech he seems bearish on. Looking at the filing, his positions in Chinese tech have done a complete 180.
A total flip.
Yeah, he was long Alibaba, PDD, JD.com, Baidu. Now they're all PUT options.
All of them.
And in quite a few cases, he didn't just switch. He actually upped the number of shares involved in the bet. Like Alibaba, that PUT is on 200,000 shares now, up from 150,000 when it was a long position.
Right, and PDD Holdings saw a big jump, too, from 75,000 long to 200,000 shares for the PUT.
JD.com also increased 300,000 to 400,000 shares for the PUT.
Baidu stayed at 100,000 shares, but again, flipped from long to PUT.
So it's a really comprehensive negative view there.
It really is. It suggests his concerns go beyond just maybe individual company valuations in China. Flipping everything like that, increasing the size on consumer-focused names like Alibaba and PDD. It could signal he's worried about weaker economic recovery, maybe weaker consumer spending than people expect.
Or perhaps regulatory worries still lingering.
That's possible, too. And then there's the new PUT on Trip.com, the travel site.
Right, TCOM.
200,000 shares there. That kind of broadens the bearishness beyond just e-commerce and search right into the travel sector as well. So big bet against U.S. tech, and now this really negative stance on China, despite, some recent positive signals coming out of their economy. Why do you think he's pushing so hard against that?
It's a stark picture, definitely. Almost like a total washout of optimism for Chinese tech from his perspective. But there's one exception, right?
Ah, yes, the lone long position.
Estee Lauder. That's still a long, and he actually doubled down on it, went from 100,000 shares to 200,000.
About 6.6% of the portfolio.
So amidst all these bearish bets, why hang on to and even increase Estee Lauder? What's the thinking there, potentially?
Well, you could see it as maybe a defensive play, right? If you're expecting broader market turbulence, a company like Estee Lauder, big brand, consumer staple, though more on the luxury end.
Right, strong brand recognition.
Exactly. It might be seen as, relatively safer. It's interesting because he sold off other consumer discretionary stocks like VF Corp and Canada Goose.
Yeah, those are gone.
But maybe Estee Lauder, with its pricing power and premium beauty, is seen as more resilient. Perhaps the idea is that even if people cut back elsewhere, that kind of established luxury might hold up a bit better.
Kind of like a potential safe harbor while anticipating storms elsewhere.
Something like that, potentially. It's a one clear counterpoint to the overall bearish theme.
Okay, so beyond the PUTs and the one long, it's also striking what's completely gone from the portfolio.
Yes, a clear out.
He got rid of all the healthcare names.
Yeah.
Molina, HCA, Oscar Health, Bruker Corp, Industrial Research out. VF Corp, Canada Goose Consumer Discretionary, gone.
American Coastal Insurance.
Right, the financial services play.
Yeah.
And Magnera as well. It's a significant shedding of positions across different sectors.
It really is. And that move away from diversification, I think, is a really important signal.
How so?
Well, it strongly suggests that his main thesis isn't really about picking winners and losers in specific sectors anymore. It seems more like an overarching conviction about a potential broad market correction.
Like a systemic risk view.
Exactly. By concentrating so heavily, mostly on the downside with those PUTs, he's essentially saying the risk across the market is bigger than the opportunities within specific companies or sectors right now. You know, instead of spreading bets, he's putting almost everything on just a few outcomes he feels very strongly about.
Okay, so boiling it down, the strategy we see in this Key 1 filing is, 1, a massive bet against tech valuations, using NVIDIA's main vehicle.
Yeah.
2, a really comprehensive bearish view on Chinese tech, e-commerce, search, travel, the works. And 3, that single contrasting long position in Estee Lauder, potentially as a defensive move.
All within a portfolio that's much bigger in dollar terms, but much smaller in the number of positions. Way more concentrated.
Right. And when you look back at how Burry operates...
It fits the mold, doesn't it?
Yeah.
High conviction, contrarian, often very concentrated. He doesn't tend to just dip his toe in. He identifies what he thinks is a major mispricing or a bubble.
Like the housing market back in the day.
Precisely. And then he takes a really substantial position. The fact he's now committed nearly $200 million to this largely bearish view, well, it certainly underlines how strongly he feels about the current market setup.
So for you listening, the big takeaway here from Burry's latest filing seems to be a very strong conviction that a market downturn is coming, or at least possible. He's particularly targeting tech, especially NVIDIA, and has taken a broad negative stance on Chinese stocks. And it's all highly concentrated, mainly in those PUT options.
Which leads us to that final thought, maybe something for you to mull over. Given Burry's track record, he's been right, he's been wrong. What factors out there, what developments do you think could either prove this very concentrated bearish stance right, or perhaps invalidate it in the next few months?
Yeah, things like how do global economies interact? What happens next with AI development? How does consumer behavior shift?
Lots to watch. It's definitely a dynamic situation.
Indeed. Well, thanks for diving deep with us today into this portfolio update. Hopefully this breakdown gives you a clearer picture of Michael Burry's latest strategic moves.
Always interesting to track.
Absolutely. Until our next deep dive, everyone, take care.